To me, it's not an investment. It's wealth I hope I never need to use. And if I do, I'm damn glad I have it. When I think of gold and silver, I think of assets that carry no counterparty risk, are not simultaneously someone else's liability, but at the same time are assets that have outlived two world wars and German hyperinflation, the Great Depression, every pandemic, everything the world has ever thrown at it. And it is still immutable wealth, so much so that the most sophisticated and well-informed investors on the planet, the central banks, over the last 15 months have bought more gold than they ever have in history.
There are a number of reasons why people buy and stack precious metals like gold, silver, and copper. For some, these metals are investment assets, great for diversifying a portfolio or multiplying wealth over time. For others, gold, silver, and other precious metals are great hedges against inflation and currency debasement. Investors in this category use these metals to protect their wealth for the future and for future generations. Miles Franklin president Andy Schectman is in the latter category. According to the renowned bullion dealer and stacker, gold and silver are safe haven assets that offer adequate protection in these times of economic uncertainty, mounting global debt, and increasing geopolitical tension, protection that other investment assets cannot. According to the Miles Franklin president, one of the worst ways of looking at precious metals investments is by simply looking at the returns you can get, especially in the short term. In contrast, Schectman believes you should take a long-term approach by considering how long these assets have reigned supreme over the centuries, compared to other asset classes that are purely dependent on the continued survival of the rapidly failing fiat system. This is why Schectman describes precious metals as wealth, and not investments, a proper store of value that will outlive us all and help us leave the right legacies for our children and their children. This important factor that many retail investors often fail to realize when prices fall, and they cannot be faulted for that. It's often easier to focus on what's happening at the moment and more difficult to focus on the bigger picture when the present is nothing but chaotic. During a recent interview, Schectman analyzes why it has become even more paramount to focus on the big picture in 2023 while ignoring all the noise that comes with price movements. One of the recent positives that Schectman chooses to focus on is the fact that central banks, the most sophisticated and well-informed investors worldwide, have bought more gold over the past 15 months than at any other point in history. These are sophisticated investors and policymakers who determine the trajectory of the world's economy and markets. These movers and shakers of global finance are now pumping in more money than ever into gold and silver. And to Schectman, that's more than enough indication of great things to come for patient and resilient precious metals investors. We will now bring you clips from Schectman's recent interview with the Living Your Greatness channel. Please watch, share, and like this video. Also, ensure you subscribe to the channel and turn on post notifications for more videos like this. Thanks and enjoy the video.
I was 19 when my dad said, let's do this together, and 20 when I actually came on board. And he said to me, look, and we started from scratch in a one-room office the size of a closet. My dad's middle name is Miles, and his buddy who lent us $60,000 along with my parents selling their life insurance policies, his middle name was Franklin. And he said, there's going to be one rule and only one rule, because I'm not going to let you make the same mistakes that I did. And that is, you'll buy something, gold or silver, every 2 weeks. And that's it. And I said, well, if that's the only rule, that's easy to live by. Let's do it. I've been the owner of the company pretty much outright for 2 decades. My dad's still around, and he's my partner in crime in many respects. And we talk a lot, but it's my business to run, and I have honored my commitment to my father, and I have purchased gold and silver every 2 weeks for 33 years without fail. I have never missed ever a 2-week period. And so to understand the way that I look at metals, I think it's relevant before we go into any questions that you have. And that is, I look at it as wealth. To me, it's not an investment. It's wealth I hope I never need to use. And if I do, I'm damn glad I have it. And if not, I know that the legacy that I will leave from my children will be one of that, even in the year 3000, when my great-great-grandchildren are, using the gold that I passed on to my kids, it will be wealth long after the bills in our wallet are hanging from a frame in the Smithsonian as an example of what was. I think part of chasing things is FOMO. It's the feeling of, geez, I know every bit as much as that guy does, and he made a killing. He must, I got to jump on this too. trends are usually established long before they become evident. Case in point, the most sophisticated investors on the planet, the central banks and the sovereign wealth funds and the commercial banks, are draining the exchanges, COMEX, the LBMA, the ETFs, Shanghai Metals Exchange. They're experiencing record deliveries. In the case of the ETFs, it's only the authorized participants that can pull metal out. And they're using the suppression of the Western paper markets to run cover. But when you see the central banks over 15 months buy more gold than they ever have in history, and really you go back to 2017, and we see a trend of central bank acquisition using the suppression of the Western paper market to run cover for what amounts to massive, massive, massive acquisitions, draining the exchanges to the extent that not just in precious metals, the London Metals Association, London Bullion Market Association, the LBMA, saw more metal delivered off its exchange last year than ever before. We saw 90% of its zinc delivered, 75% of its aluminum delivered, and so much of its silver delivered that they put out a memo at the beginning of 2023 saying if deliveries remain the way they were in 2022, by the end of the year, there'll be virtually nothing left for us to deliver. And so when you talk about massive deliveries off of COMEX or the LBMA or backdooring the ETFs, these are very sophisticated traders doing that.
During his interview, Schectman also talks about the issue of price manipulation by large commercial banks and precious metals exchanges. He explains that big money investors are positioning quietly ahead of the curve using the suppression of the metals markets. So, they keep prices low and then buy incredibly large volumes at the fastest pace in history while simultaneously diversifying away from the dollar and other fiat currencies. Schectman believes there is something much bigger happening in the background, something which might not get completely obvious to retail, everyday investors until it is too late. This is why the Miles Franklin president continues to add to his precious metals positions with every opportunity he gets. Before we get back to Schectman's interview, as he discusses more reasons to focus on the big picture, tell us what you are doing with your precious metals holdings right now. Are you adding to your positions despite price declines or waiting for possible further decline before making your move? Please share your strategy in the comments section below so other stackers can learn a thing or two. Here are more clips from the interview.
The big money is positioning quietly ahead of the curve using the suppression of the metals markets, which are well documented. And it's tremendously frustrating to see a handful of large commercial banks suppress the paper price of gold. Just to give you an example, a week ago Friday, I haven't looked since, but a week ago Friday on COMEX, there were 95,000 September contracts still open in silver on COMEX, 95,000, which represented 474 million ounces of silver. The thing about it is there's only 30,000 30 million ounces of silver in roughly 30 million ounces in the registered category on COMEX. Those are the bars that are available to be delivered based upon the contract. So explain to me how the hell you can have 30 million ounces backing 474 million ounces in paper claims if they stood for delivery. That's called rehypothecation, and it allows the exchanges to control the price based upon the derivative of it rather than the way that the exchanges were originally designed, where the commodity itself would dictate the price, not the futures market, and the ability to, with tremendous leverage, over 30 times leverage, to control the paper price. And big pocketbooks like the commercial banks, they know where everyone's positioned, where their pain points are. They can suppress the price by shorting it, dropping lots of contracts onto the market, and get everyone to sell, or they can go the other way. The point of it is that it's a casino, and because they have used this to their advantage, you are seeing the markets being drained by the most sophisticated investors on the planet. By the time the public wakes up and sees it's a trend, whenever that trend in motion really takes hold for whatever reason, well, the insiders will have been in for several years, base building and creating their value play. So I guess the bottom line is that if you want to be the person who succeeds in investing and isn't always chasing, then you have to spend enough time to research and understand the fundamentals, the big picture, rather than just the price action. Because I would argue price is the greatest tool of misdirection that there is. And you want to misdirect the markets, you do so with price, which blurs the fundamentals that are so very important. So to me, fundamentals are more important than price, but you have to really believe that the research that you have done and the fundamentals that you see in the end will play out the way that you think, rather than looking at a price, which is very counterintuitive to world events right now. So whether we're talking precious metals or any other investment, do your homework and don't just chase price or listen to your buddy who tells you this is the place to go. And because of that, you do it. You only have yourself to blame in that respect. Whether we're talking the BRICS or the West, I think ultimately gold will have a role in pegging to a new system. We'll start with the West before I get to your question on the BRICS. Well, first, if we go back to 2019, remember I said the banks were buying gold in 2017 and 2018. They also did a lot of repatriating of their gold. The German Bundesbank, the Bank of Austria, Hungary, Turkey, Poland, the Dutch National Bank, the Czech National Bank. All of these banks not only went on a buying spree starting in 2017, but all of them repatriated their gold from the New York Fed and the Bank of England out of nowhere. In 2018, those same banks bought more gold as a group than they did in the 60 years previously combined. And 2019, those numbers doubled. And then the Bank of International Settlements reclassified gold as the world's only other tier one reserve asset. So since the end of World War II, US dollars and treasuries have been tier one. That's it. The BIS, which is the central banker's central bank, the most powerful bank in the world, who not only told us that by 2025, every country needs an operational CBDC, but they also in 2019 reclassified gold to a tier one level, which is extremely relevant when you realize the lengths that the central banks have gone to suppress the price and accumulate the physical. And so as we move forward and we see the BRICS, we'll get to that in a moment. I'm going to jump forward to the IMF, and then I'll go back to the BRICS. The IMF, the head of the IMF, Kristalina Georgieva, the International Monetary Fund, another roughly 150 countries, came out and said central bank digital currencies that are not pegged to something, not backed by something, are just fiat. Well, about 6 months before that, the IMF, who has never been overly gold friendly, came out with a report that was entitled "Gold as an International Reserve, a barbarous relic no more?" ? So you have the IMF acknowledging gold's role as a monetary asset and not a barbarous relic. You have the head of the IMF saying CBDCs need to be pegged to something. What would that something be? Doesn't it make sense to use the only other tier one reserve asset?
In addition to what is happening in the West, we also have the huge movement currently gathering force on the other side of the world. The BRICS alliance of Brazil, Russia, India, China, and South Africa is quietly making moves that don't seem too obvious to everyone right now, but would when all other factors come together. According to Schectman, the most important thing to note from the just concluded BRICS Johannesburg summit is probably the acceptance of Saudi Arabia as one of the 6 new members that will join the alliance in January. Schectman describes the Middle Eastern country as the linchpin to the dollar hegemony, one of the main reasons why the United States has so far maintained its superpower status. With the addition of the new members in January, the BRICS Plus alliance will not only have the largest oil exporter in the world, it will also have 4 of the top 10 oil exporters in the world. And even though they might not introduce a gold-backed currency soon, they have made it clear that they want to stop using the dollar for trade. This is already more than enough reason to immediately seek shelter and protection against what's coming by stacking precious metals like gold and silver. What are your thoughts on Andy Schectman's interview? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.